It's VA Wednesday and Student Loan Week combining to make a joyous union. Kind of. Okay, so student loans, everyone has them. No one wants them. I think we sum that up, right? Now, as a lender, it's something that I have to pay really close attention to, especially in this market right now, because what's happening is when people fill out online applications, even when we do the application over the phone, when we pull credit, the payments are coming up as zeros. Yes, because of forbearance. So we're seeing a lot of zeros, which is making us have to do manual calculations, which 9 out of 10 times we have to do anyways. So sometimes if you're talking to a lender, or let's say you guys filled out an online app and you got a pre-approval and you're like, I'm already approved. Why is Jen telling me I'm not? You might want to see if that lender actually did the calculations, because sometimes they don't. You know, we have so much of our systems that are automated now. You know, we've got desktop underwriting, you know, credit pulls, like these online applications are amazing with the level of stuff they can do. However, they do not calculate student loan payments to guidelines. And that's because it's a very manual thing. There's lots of well and ifs and ors, and the technology is not there yet, at least from what I've seen. If there's some magical loan company watching this right now where the student loan calculations are done perfectly without the originator touching it, please call me. But as of now, it is up to your good friend here in the seat to calculate the the payment calculations on student loans, because the computers aren't doing it. Okay, so let's talk about VA and how the guidelines relating to student loans look. So a couple things that are great. So number one, if you're on an income-based repayment plan, we will use that payment even if it's zero. An income-based repayment plan is totally different than forbearance, guys. The forbearance, what you're experiencing now because of COVID, it is not a long-term situation. No one knows how long it's going to last, but we are not treating that as your future. Okay, so do not confuse forbearance with an income-based repayment plan. Totally different. So if you're in the income-based repayment plan, we will use that payment. Okay. Now, if you have them deferred is different than forbearance again. So deferred would be like maybe you're still in school. I don't know. There could be different reasons for why they're deferred. As long as you can provide a letter showing that they're deferred for more than 12 months, we can accept that and not hit you with the payment either. Now, is that a letter from you? No, it's a letter from whoever is holding your student loans stating that they are deferred for at least 12 months. Okay. I don't see a lot of those letters. I would love to see them, but I don't see a lot of them. So I don't know how realistic it is. So I'm just going to tell you from my personal experience, don't see a lot of them. Okay, so what do I see a lot of? Well, right now I see a lot of applications coming over with, you know, hundreds of thousands of dollars of student loan debt and zeros for payments. So the calculation I'm using, VA is different than Fannie Mae, Freddie Mac, or FHA. They're all different, you know. God bless them. They make it exciting for us as lenders. Thank you. Yeah, I'm thanking all the different bureaus for making this fun for us. Okay, so with VA, the way that it works is this. Student loan balance. So let's say it's $100,000. We take your student loan balance times 5%. So 100,000 times 5% is $5,000. Okay, now am I going to hit you with $5,000 a month? No, that would be messed up, right? I mean, that'd be dark. It'd be dark. What I'm going to do is I'm going to take that $5,000 and I'm going to divide it by 12, which is roughly 417, I think it's like 416.67, somewhere in there. So we're going to take that 5% and divide it by 12, and then we're going to hit you with that payment. So if you have $100,000 in student loans, we're going to hit you with that 416 payment. Is that right? I know I wrote it down somewhere. Yeah, that's right. Okay, so we're going to hit you with that 416 payment. Now, let's say next year, like the zeros stop, right? And people have their payments reporting again. Now, the way that VA, at least for us, looks at this, and I say for us because with VA, you just never know. Like there's a lot of lenders overlay. There's a lot of interpretation of guidelines. You could call a VA center and get one answer. You could get a different one. It's a joy. It's a joy. But the way that I'm looking at it is if you have a payment, so let's say you have a $100,000 student loan again, and your payment is $600. Okay, I'm gonna hit you with the $600. If you have that $100,000 loan and your payment's $200, I'm gonna hit you with the $416. Yeah, so it's gonna be that 5% divided by 12 or the payment, whichever is higher. Yeah, but I mean, the 5% actually really isn't bad. It's not that far off from what we see with Freddie. It's lower than Fannie or FHA. So it's like a nice in between, I would say. So important notes in case you didn't see yesterday's video. If you're working with a lender and you filled out an online app and you got a pre-approval letter and you've never spoken to anyone, guys, you need to call these lenders and make sure they're actually calculating your student loans. It's really easy with how many applications lenders are getting right now for them not to go in and calculate out the income, because the online applications are running credit. They may run it through desktop underwriting. They do a lot. Like, I mean, ours will try to pull your certificate of eligibility. Like, they're slick. Like, kudos to the tech guys, but they're not calculating student loan debt. And that can be the difference between an approve or a deny. Now, another thing I see with VA that drives me bonkers is there's a lot of lenders that are hitting people with 1% because they're treating it like FHA, which it is not. It is not. So if you're like, oh, I can't qualify because, you know, the lender said they had to hit me with 1%. No, they didn't. This is a VA loan. Like, you don't have to hit the borrower with 1%. It's 0.5% divided by 12. So really watch out for that. It's something that gets confused a lot because FHA and VA, because they're both government loans, do have some things in common. However, this is not one of them. And VA is definitely more lenient and forgivable than FHA when it comes to how we treat those student loan payments. So I hope this was super helpful. Questions, comments, I'm licensed in 43 states. You guys know how much I love VA loans, so call me. I'll always talk to you or one of the gals on my team or all of us. We're here to help.